So we're having a little bit of a down day today in the markets with the S&P 500 as of this video down around 1.7%. We have yields getting absolutely hammered and what to me looks like a mini COVID move. There's a lot of fear around this Delta variant. We have a little bit of a sell-off with the markets, even though we're still only, minus 3-4% from all-time highs. With all that being said, I wanted to talk about how I traded this morning and what positions I took off and put on, just because we don't have these down moves very often, and it's good to document, kind of show my thought process of how I trade in the options portfolio when we have a larger spike in the VIX and there's a lot of volatility spiking across the board. For me, I see opportunity. Other people, may be panicking. I know it's not a huge down move yet, so I'm not overloaded, but I just want to talk about my thought process going into this move and the positions I had on versus what I'm doing now when we do have a down move and a spike in volatility. Here's a chart of the S&P 500 or SPY, and the last week is when I was kind of worried about the S&P 500 rolling over. We saw that the moves to the upside was kind of running out of steam, hit around that 70 RSI, and this is kind of when I took off a lot of my positions and put on a couple short positions in the options portfolio. Actually, last Friday I put on a credit spread, a credit call spread specifically in SPY, because I thought the S&P 500 was going to roll over. There was that bearish divergence on the MACD. So it turns out that follow through happened. Partly, we have the catalyst with the Delta variant news, and then I think just overall the market was running out of steam. When we have that rollover or sell-off in the S&P 500, you get a spike in volatility because there's a lot of fear and uncertainty in the market. So you can see the VIX went above the 200-day moving average, and in the past that's kind of been a resistance point where you have a couple days where it's over, and then you have a pullback as people settle down. Now the question is whether or not this is going to be a sustained sell-off or kind of a couple day sell-off with a quick bounce. My thought is that it probably will bounce off that 50-day moving average. I think the fears around the Delta variant are probably a little overdone. So this is just more of a catalyst to add to, okay, the markets were a little overbought, everyone was caught long a little bit, and now there's a mini sell-off. With this sell-off, we have a huge move in bonds. I mean, the 10-year yield is down around 7.7%. So this tells me that banks are going to get hammered today. Basically anything with value. Oil's getting hurt today. It's kind of a mini COVID move with companies like Etsy, Teladoc going up, oil going down, as well as banks. Okay, so now that we have an overview of what's kind of happening in the market, what am I doing? Well, I'm being a contrarian and selling volatility into this down move and looking for longer positions or long delta positions. What I ended up doing today was selling a put in US Steel. I took off a credit call spread, which was a bearish move for 50% profit. So I took off some short delta. And then I added an iron condor and skewed it slightly short delta. So you can see these positions that were filled today. The US Steel put I sold for $107 credit. And the main reason here is a contrarian play. I think US Steel and cyclical stocks in these big sell-off days, and you have a volatility spike in these names, it's decent to sell puts into the weakness if you don't think, okay, full-on COVID is coming back. That's kind of the play here. I don't think we're going to start shutting down again. I also bought back a spread for a profit of 50%. And the reason I did that was the objective of that trade is I thought we were going to touch that 50-day moving average, and we got it within one day. So I put on that position on Friday, and we are already at 50%. So there's no reason to get greedy, and I ended up just taking off that position for a 50% win. And in order to put on more delta, or short delta, I sold an iron condor that was slightly skewed to the downside. Here's the iron condor that I sold, and I went 60 days out because my other positions are mostly in August. So I decided to put on a September position, and I sold the whole iron condor for $153 with a max loss of 147. So the widths of the iron condor are $3 wide, and the short call side 440 is kind of the area that I'm looking for it to trade under, and over 404 on the put side. So if the S&P 500 or SPY falls within that range over the next 60 days, or we have a big IV contraction, I'll make money in that position. And then the other position I have on is Corsair, which I have 100 shares from a short put that was assigned. I sold a covered call to stay mechanical and bring down the cost basis in that position. Overall, theta numbers around 7.7. Now, I don't want to sell too many puts today. And the thought process is if we do have a sustained down move in the S&P 500, I don't want to over leverage on one day. I kind of want to spread out the positions. So I'm looking to probably add 1 or 2 more positions if we have a continued down move. But otherwise, if we do just bounce back off that 50-day moving average, I'll make money with the positions that I have right now. But like I said, I don't want to put all of my eggs into one day. So I don't want to trade everything today and then have another 2% down move tomorrow and not have any buying power left. So just managing risk, managing sizing of positions, and that's kind of my thought process. Now I'm currently making this video around 10:40 a.m. so we'll see if the down move is sustained, because in this market sometimes we have pretty massive upswings and we can have down days wiped out completely. But overall, we haven't seen a down day like this where we're down 1.52% on the S&P 500 for about 2 months. So relatively big down day for the market. Obviously, if you compare it to 2020 COVID moves, like it's nothing, but we haven't seen a lot of volatility in the market. So with this spike in volatility, I'm a little bit more active in the options portfolio, making more moves. And when volatility is low and things are quiet, that's when I keep my positions smaller and I'm not trying to use too much buying power and expose myself to down moves like today. So into these down moves, I can put on a bunch of positions, and if there's not a lot going on, I'm just patient and I'm kind of just waiting. And today is an example of where I kind of pounce. Hopefully you guys enjoyed that video, kind of going into my thought process around trading in the options portfolio and more of the theta strategy kind of thought process and being a contrarian. If you did like this video, give it a thumbs up and subscribe to Main Street Wolf, where we talk options, investing, anything to do with money. Thanks guys for watching, and have a great day.